Okay, fantastic. So accountants want to look into IFRS 5. What does it mean? IFRS 5 means non-current asset held for sales and discontinued operation. Believe me, accountants, that we have different type of assets. From our prerequisite knowledges, let me open my board. From our prerequisite knowledge, we have something we called plant non-current assets. And current asset. Abi, we have these two, isn't it? So who can give me the information that we have under non-current asset? Oh yeah, figure me. Oh yeah, give me non-current asset. Oh yeah, what will be there?
Plant and machinery.
Plant and machinery.
Plant and machinery.
Inventories.
Land and building.
Furnitures and fittings.
Inventories.
Land and building.
Equipment.
We have equipment.
Leasehold improvements.
Lease. What do you call it, sir?
Leasehold improvements.
Okay.
And goodwill as well.
Okay.
Motor vehicle.
Yeah. That's okay. Let me put motor vehicle. etc. So also I have my under here, I have my inventory. I have my cash and bank balance. You have your prepaid.
It's like receivables.
Receivables. Short-term investment. etc. Yeah. So now, since we now have all this information, this standard is now telling us that, okay, you said that non-current asset held for sales. I already have all my non-current assets regarding everything we have on my board. Okay, we no longer want to use it. What does it now mean? That means that a particular asset will no longer be useful here among them. So let's, for example, for the sake of explanation, we want to delete this equipment. That means that this equipment will be what? Discontinued from operation. That means it is no longer useful. So we want to sell it off. Now, IFRS 5 is now trying to tell us that what and what are associated. Who is that? So as a result of that, we are now trying to look at, okay, what are the basic things that this standard will tell me to do? What are the things that this standard doesn't want me to do? So as we continue, we will see that, okay, the rules guiding this IFRS 5 is what? And mind you, accountant, something that will help you is that just know the principle. For those who believe that they've left school for a very long time, or those who are coming from foundation, for this particular standard, it is not hard once you know the principle. Account is all about what? Understanding the principle. Then you are good to go once you understand it. Are you getting me now? So for that reason, we now want to see the information that are attached to it. We have definition of terms, general rule on the recognition, criteria for classification of non-current assets or disposal group held for sale, measurement, presentation, and disclosure. IFRS 5, non-current asset held for sales and discontinued operation. What does it mean? This non-current asset held for sale. Don't forget, I said something earlier that if you want to sell off a particular what asset. Like I said on my board, for example, now as we have it here, we say we are selling off our equipment. That means that my equipment will no longer be part of my asset anymore. So I'm selling it off. I want to dispose it. That means that I will no longer categorize it as an asset that is generating more revenue for me, or that still has what any economic value or any economic benefit that is flowing back to that organization. I hope you are getting me now. So that is what we want to try and realize regarding the standard. So as we continue, accountants, we now have that disposal group. We all believe that we have something we call group account. So for your level now, we are still going to be dealing with what? With group account. Are you getting me? But basically, who do we call a group? A group are people, or a group of people, companies coming together to form one particular what entity. Basically, please, can you hear me?
Yes, sir.
Yes, you can.
Okay.
Yes, sir, I can hear you.
So basically, one thing about the group is that always have a parent company. Okay. I'm very sure my sister will just hear me now. We're using the same network. That's MTN. Don't mind that MTN today. So basically, what we are trying to say is that if we have this kind of information, we have Bumi PLC, Bola PLC, Bode PLC. If Bumi should have 80% and 60%. Also, we have Bokomi. It has 52%. So that means that all of them, both Bumi, Bola, Bokomi, and Bode, they are all group members. But one is a parent company, which is Bumi. Bumi acquires 60% control of Bola, while Bumi also acquired 52% of Bokomi. Bumi acquired 80% of Bode. I get me now. But if I now have the intention, maybe my organization have the intention of disposing of a particular group or a particular segment under this particular account or under this particular what group, that means that you want to discontinue that group from existing. So that means that if you are selling off this what Bode PLC, that means I will write it off from my account. I will write it off from my account. So now, without wasting our time, so we now have disposal of group. Are you getting me now? Also, discontinue operation. As I've said earlier, that discontinue operation means that that particular asset, you no longer want to use it anymore. Are you following me now? Following me now? You don't want to use it anymore. That's what we call discontinued operation. Now, accountant, without wasting our time, we have the general rule on the recognition of assets. Well, when an asset is shown in my book of accounts, what am I going to show? We believe that I will show some certain things in my financial statement. And those information I want to show in my financial statement are now being analyzed below.
Please, I can't see your screen. I don't know if you can hear me.
No, don't worry. It's network that is just fluctuating. I'm trying to switch to the other one.
Okay, sir.
That's Nigeria for us. Sorry for that. Can you hear me?
Yes, sir.
Yeah.
Yes,
Sorry.
we can hear you, sir.
It's apology.
Yes, sir.
It's a kind of network, so it's beyond
Yes,
my
sir.
control. All right. So, as I'm saying, I said that once you now want to recognize from the book of account, well, that means the financial statement, how will I go about it? Or for this particular standard, how will you go about it? One is that when an asset is derecognized, its carried amount is removed from the SOFP, Statement of Financial Position. In line with IS 16, is one of the standards that you are going to be treating for this level. IS 16 is also part of them. An item of PP is recognized in the following circumstances on disposal of asset. That means you want to sell it off. So if you are derecognizing it, it is no longer what to be put in use. So also, when no future economic benefit are expected to arise from its use or from disposal, please, are you with me? Hope I'm not muted.
Yes, sir.
Okay.
Yes, sir.
All right. So we now have the third one, the fourth one. If a non-current asset is disposed of, the gain or loss on disposal should be included in the profit or loss in the period in which the disposal occurred. Any gain or loss should be included in the period in which the profit or loss occurred. Non-current assets are held for sales. Non-current assets held for sales are subjected to impairment test, presented on a separate category on the face of SOFP, are no longer depreciated. That means that what you will no longer be associating with this. Are you getting me now? What you no longer need to be associating it with what IFRS 5. That means what you mean is that the asset, or let me use the word, in your house, if you have a particular non-current asset, something you've been using for a very long time, and you no longer want to use it anymore, what will you do? You would either dispose it
your
of.
network is
Yeah.
fluctuating.
Mine? Others, can you hear me?
Yeah, we can hear you.
We can.
We can hear
We can
you.
hear you, sir. We can hear you, sir.
We can hear you.
Okay.
We can hear you,
All
sir.
right.
We can hear you.
All right. So what I'm saying is that in everybody's household, as we are in this class, is that we will always have something that you no longer want to use anymore. You want to dispose it of. Are you getting me? If it is a fridge or a freezer that you no longer want to use anymore, that means you will put it aside. That either you sell it off or you dash it out. But normally, in your mind, you have the intention that you no longer want to use that freezer anymore. And also in some other person's house, maybe the other thing there is something you want to dispose of is your electric kettle. While in some other people's house, what they want to dispose of is their wardrobe. Do you understand? So we have a kind of variety no assets whereby it has been giving us economic value that we want to what disposed of. Are you getting me? So that is what this standard is trying to tell us. So after that, okay, After that, we now have criteria for classification of non-current assets or disposal group held for sales. Non-current assets or disposal group held for sales. You want to dispose it off. I get it. What are the criteria that you need to follow? What are the criteria that you need to do what? Need to follow. The first criteria is what? Mass. That means management commitment. To sell a non-current asset or disposal group. That means that for this standard, we have acronym to use, accountant. That acronym will always help you. It is not the standard that is forming the acronym for you. Please take note of that. But the acronym will help you regarding this standard and what you need to know regarding this standard. This acronym is trying to analyze it for you. At the end of the class, I'm going to ask you, what does mass is? I'm testing everybody's understanding, or maybe if you are following me. So now for that, we now have the word, or let me say, we have what we call the acronyms of mass. The M stands for management must be committed to a plan to sell the non-current asset. The freezer that my brother wants to sell, or the freezer that my sister wants to sell, you will have decided that you want to sell it off. Nothing will change it. You've made up your mind. You will sell it. That is commitment. You want to pass this diet. That is commitment. That is why you are in this class. That is commitment. You are different from someone who is procrastinating. Procrastinating means that they are not ready yet. So they've not met the criteria of passing Ican exam. The other one is, which is A, is active plan to locate a buyer. But you must complete the statement. There must be an active plan to locate a buyer. That means that my brother, my sister who want to sell that freezer, you must have a buyer. Either it is all these people who the fridge and the refrigerator engineers. I get me. You must locate them. You must know where they are, or you will call them to come. There must be active buyer. Somebody want to buy that asset. The third one, assets must be available for immediate sales in its present condition. You are the one who want to sell the freezer, and yet the freezer is not working well. Accountant, one thing about us is that I want you to testify to what I'm saying is that if you are going to the market, just testify if I'm lying or what I'm saying is true. You know that one thing about we the accountants is that we always want to know the resources. Hello, there is something that distinguishes economists in the house. I'm sorry for this statement, please. I'm not saying you are stingy. I believe I have an economist in this room. Please permit me for the statement. Please, I'm not under. I'm not devaluing you, please. But the way we see things from the perspective of an economist and an accountant is different. Where economists believe in limited resources, are you getting me? Whereby some people will believe that they are stingy people, that they don't want to spend. Economists will go for something that will satisfy their immediate needs, not something that it doesn't have stuff like that. Basically, what we call the scale of preference, right? Isn't it? The economists in the house, we have the scale of preference, right? That you follow it based on their hierarchy. Am I right? The economists that we have.
Yes, sir.
You are correct.
Yes, sir.
Okay, so now accountants will always believe that, okay, fine. There are some things that are useful, but they are not meant for immediate use. I don't know if you are getting me. There are some things that are useful, but are not meant for immediate use. Economists will see an accountant, though you too, you are now an accountant, you will understand the concept of what I'm bringing in now. You will need, I didn't mean you are still maintaining the full concept, or you want to maintain your profession as an economist that, okay, this is what I study. You will see it as if that they are wasting money or they are wasting resources. An accountant don't see it as wasting resources. Accountants see it as one, they want to use that expenses to reduce their tax liability. That is one. Number two is that they are buying it, or they are incurring that particular asset for the sake of what? Future purpose. One example is all these fire extinguishers. Accountant, I want to believe that we all know all these fire extinguishers, right?
Yeah.
Okay.
Yes, sir.
Now, look at it from this perspective. Do we always need it in the company? Let us be sincere. Do we always need it?
No.
No, sir.
But
Yes, sir.
it must be present, Abby. We must have it on ground.
Yes, sir.
Why?
Yes.
Who can
For
tell me?
emergencies.
For
For
emergency.
emergency.
If there is any
That is
fire.
provision. Thank you very much. That is what we call provisions. That means we are making provision for such emergency. So an accountant will make provision for that for future purpose, I will need this. Something that an economist will just see it normally as if that, you don't need this. Why are you buying it? And for an accountant, you need it because it is one of the things that forms your non-current asset, even though you don't need it. But the time you will need it, it will save you a lot of cost. Accountant, believe me, there is another thing we call insurance, right?
Yes.
That
Yes,
insurance,
sir.
Yes, sir.
to an economist, does insurance really matter? Economists in the house, does it really matter? Please, I'm asking you a question, please. Please, yeah, give me an
No,
answer,
it
please.
doesn't really matter.
Okay. Now, for an accountant, it matters simply because that insurance will help them to safeguard some asset in case of any damages. Are you getting me now? So that means that we are trying to bring things together for us to understand the concept. That means, where we've branched to is from the perspective of the asset must be available for immediate sales in its present condition. And that is because that you want to sell something, it must be available. You can't just tell me that this thing is not available, you don't have it on ground. No. So that is why you will always see things in different perspective. As an accountant, you will see this thing that, okay, I no longer want to use this thing. So definitely I need to categorize it to something else. The fifth one is sales, which means the S. Sales of the asset is expected to take place within 1 year from the date of classification. What does it mean? The statement means that from the date of classification will fall within one accounting period. Are you getting me now? It will fall within one accounting period. An accounting period is always 12 months. Your reporting period will always 12 months. We are not talking about tax now. Under tax, we always have all this proration, we are on proration basis and the likes. But in as much you are doing your financial reporting, if you are prorating, that means that for the sake of depreciation charge. So, but that is not where we are going today. But for this particular standard, it is telling me that sales must take place within 1 year from the date of classification. And the last S, which means sales must be highly what? Probable. So those are the 5 what? Criteria. But one thing is that accountants that we need to understand is this. Where one criteria is not met, the other, it makes the other to be what? Valueless. Where one criteria is not met, it makes to the others to be valueless, whereby you will no longer need to calculate. That is why you need to be very, very careful and see where the examiner is coming from. Because at times, examiner might give you a question 15 marks and you will not even have any calculation to do. So all you just need to do is just that tell them the reason why there won't be any calculation. Then you score your 15 mark excellently without any disturbance. The next one is your measurement of asset being held for sale. Okay. The next one is my what? Asset being held for sale. How do you measure it? A non-current asset or disposal group held for sale should be measured at the lower of its carrying amount. The lower, I get it, the lower of the carrying amount and fair value less cost to sell. That is your NRV. Fair value less cost to sell. This fair value cost to sales form two things. The fair value means that the worth of the market and what will you incur to sell that asset. That's the meaning of fair value less cost to sell. An impairment loss should be recognized where the NRV, fair value less cost to sell, is lower than the carrying amount. There is an exception to I-36 that requires entity to recognize an impairment loss only where recoverable amount is lower than its carrying amount. Believe me, for this standard, I want to believe that you all have access to the new syllabus, right? So that you will know the standard which you need to cover. Are you getting me now? So it will always help you.
Sorry, sir. I don't have access to the syllabus, so how do I get it?
Okay. No worries. Just after the class, maybe you should just make it as tag me so that I can send it to you. Send it to the platform. Everybody will have access to it. Or is there anybody who has it?
Thanks.
Is there anybody who has it?
I think I do. I'll check.
Okay, you have it, right?
Yes, sir.
Okay, then help us to send it.
I think it's on the group.
Okay.
You can check
okay,
one of the groups on it. You sent it yesterday.
Okay, no wala. So in case you don't see it, Sha, before the end of the day, so please just tag me.
Please.
So I will send it to you.
Okay. Please just send
tag
it.
me.
I joined.
Mhm.
Sorry, I joined today. I don't have access to it.
No problem. No problem. No problem. Okay. Continue. So now, one of the standards. You said? My what?
Just
Yeah, the network. I can't hear you, sir. Please, others, can you hear me? Him?
yes, we can hear you.
Yes, sir.
Okay,
I can hear
okay,
you.
Yes,
okay.
sir.
Maybe you want to say my screen is
Yes,
not
we can hear you.
bold.
We
Okay,
can
let
hear
me.
him, sir.
Don't
That's
worry.
the
I think
yes, sir.
what
That's it,
is
sir. That's it, sir.
I think that is what he's trying to say, that it's not bold. Okay, let me bold it. Don't worry. I think it's bolder now. Okay, now, so is it okay now? You can all see it clearly now. I think it's
Yes,
better now.
sir.
Yes.
Yes.
Okay,
Yes.
Yes, sir.
okay. So now, presentation. How do you present it in your financial statement? The word financial statement
Sir, please,
comprises
before
of.
going to the presentation, please, can you
Okay,
come again with the measurements? The
okay,
explanation of the
thank you.
measurement.
the measurement, I said a non-current assets or disposal group held for sale should be measured at the lower of carrying amount. And what does carrying amount means? That carrying amount has suffered, or let me say it, a kind of an asset who have been suffering depreciation charge. I get me. Let me use both for those who doesn't understand much. Okay, for example, let's say cost of assets. We are told is 600,000. You know, this is the cost of that asset, right? You now have depreciation. For the period, 50,000. You know, depreciation always make our asset to reduce in value. Yes or no? Do you agree with that?
Yeah.
Okay. So how much will I have left? You know, I will have 550,000. Abi?
Yes.
So that is what we call my carrying amount, or we call it your net book value. Net book value. So that means that you no longer maintain the cost of this asset. Basically, if you get to IS 16, more explanation will be made that you will remember what I'm saying today, that Mr. Sadiq, as Sadiq says, is that your carrying amount will be comprises of your cost of asset minus the depreciation charge. Then you have your carrying amount. So the carrying amount, if this year, this period, period is 2024, so that means that at the end of 2024, which is 31/12/24, you know that for the beginning of 2025, 1/1, you know that your asset will now be this amount, which is the one that you have at the end of the period. You are taking it to another period, which is 550. Are you getting me now? So that is the carrying amount. So now, they now say that your fair value less cost to sales. The fair value less cost to sales,
Sir.
what does it mean? I'm with you.
Sir, yes, I want to ask, apart from depreciation, do we also less or subtract anything from the cost of assets to get the carrying amount? Maybe impairment loss, or apart from depreciation to get your carrying amount?
Yes. If there is any impairment as a result of that asset, you will bring it in. But basically, in the first year, I get me, sir. Impairment doesn't always occur in the first year of the purchase of that asset. I get him.
Okay, sir.
When that asset have been in use for a several period, that is when the impairment will now be coming in.
Okay, sir.
Impairment will always, you're welcome, sir. Impairment will always comes in as a result of, you know, you have the intention of selling off a particular asset, or you want to carry out a revaluation. I get me now. When you have a revaluation, what does revaluation mean? You want to know the value. You know, for example, now most of us, we are joining this class with laptops. Some are joining with tablets. Some are using phones. So basically, what that fair value means is that the worth of your laptop. Are you getting me now? Let me use a case study. There was a laptop I was trying to purchase. I get him a few weeks ago. That laptop cost 510,000 naira. That's HP Envy 360 Ryzen 5. 510. I hope you are following me, accountant. I'm breaking it down for analysis so that you understand that concept very well. Are you following me, please?
Yes.
Yes, sir.
So the cost of that laptop is 510. The cost of that laptop is 510. Okay. Now, you know, if I still have that asset with me, I hope you're following me. If I still have that asset with me, if I bought it, I didn't mean I bought that asset far back January 2025. Accountant, will it still be the same value, that 510?
No.
No,
That
sir.
means that I will bought it
No,
below
sir.
that price. Below that price, Abi?
Yes.
Yes.
Please, somebody give me a figure of how much do you think I can get it, so that it will make
At,
it
wh-
more
at,
easier for it.
Maybe 350, sir.
Okay.
at
Now,
how at, ho- at how
let
many
us.
percent depreciation value?
Have I considered what, sir?
I say at how many percent depreciation value?
We're not discussing
No,
depreciation.
without depreciation. No, we are not considering any depreciation now, sir. No.
Okay.
Without depreciation. Let's say my brother said 350. That laptop, January 350.
Okay.
Now it is now 510. It is now 510. Accountant, if I want to sell that asset, see, there is difference between fair value and you are selling it. Fair value is telling you that if you want to sell that asset or you want to transfer a liability, I now want you to get that concept very well. If I now want to, I want to sell that asset, you know that I will need to know the value of that laptop in the market now, right?
Yes, sir.
Yes.
Okay,
Yes.
the new value is now how much? 510, isn't it?
Yes.
Yes.
Yes, sir.
So accountant, if I want to sell it, I bought it 350. How much do you think I should sell it? You don't forget that the new value is 510 and I bought it 350. How much do you think I should sell it? Accountant.
450.
You sell it 5.
So the
So
same
can
with
you
just
see?
of the 510.
Thank you very much. You can see
I
that
have
you are
100.
having a kind of opinion simply because we now know the new market value of that laptop. That is fair value. That means that the amount you are going to sell a particular asset or transfer a liability. Now, accountant, let me agree with every one of you that we just have a kind of assumption that we agreed on 450,000. If I have a friend, if I have a friend that I'm owing 480 and love that laptop, please, if I should sell that laptop to that person, please, how much do you think I'm owing the person now?
30,000.
30,000.
30,000. Yes.
Please, do I have more liability to settle?
Yes.
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 Hold on. No.
Please come again with the question. I didn't
I said, I'm owing a friend 480. And we agree that the cost of that asset, that laptop, is 450. If I'm giving him the laptop of 450, please, how much is my liability? You said 30,000.
Yes.
Right?
30,000.
Yes.
I'm now asking that as an accountant, they will ask you that, do your liability reduces or increases?
Reduces.
It reduces.
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 The word liability means that amount what you meant to pay. I'm breaking it down for those who doesn't have finance in their knowledge like that. Liability means something you are owing. So that means that I have reduced, because of the worth of that new laptop, I have reduced my liability to 30,000 naira. I get it now. That is the fair value less cost to sell. What does the cost to sell mean? Cost to sell means that what I need to spend to reduce the value, to make that asset, to make the laptop to be sellable. Maybe I will need to buy a kind of all these designed back spot like that. Maybe if I incurred maybe 20,000 naira. So that means that 20,000 naira, we said if I'm selling it, I said 480, and cost to sell. We said we will use 20,000 naira to refurbish it. Accountant, how much will we get at the end of the period? What will be the money that will flow back to you? that you
460.
will have the raw cash to 460. That is your NRV, net realizable value. That means the net, what you will get at the end of the period. The salary that me and you we are getting from our offices means that salary, it has been subjected to what? To tax. So we will collect net. Somebody who receives 300K in his offer letter, at the end of the month, please don't expect that you collect 300. You should be expecting something around 270, 260 because you are subjected to pay tax. So that means that you will not, that is the net amount. So if you are determining, sorry, this one is not part of our scheme, but I'm just using it to buttress what we are doing in class to make it more easier, is that if you want to bargain your salary, that means you need to bargain on the what? On the net, not on the gross. If you are bargaining on the gross, don't forget that you'll be subjected to tax. And once you bargain on the gross, they will want to bring you down. But if you bargain on the net, you will want to get, you will get more money at the end of the month. That means that you must be very, very vigilant in terms of a negotiation. So, you know, what is helping us now? Our NRV is helping you too. I hope I'm making sense, accountant. I hope you are getting this.
Yes, sir.
Yes,
Okay.
sir.
Yes, sir.
Yes, sir. Sir, please, I have a question.
Quick one, please.
When somebody was asking a question on is there any other thing to remove from cost of assets to get carrying amount aside from depreciation, and the person made mention of impairment.
Yes.
Please, I'd like to know what that is.
That impairment is what I'm trying to say is that, okay, let me still come back to this board again. You know, okay, you know that we said this is 460. Abi, I will answer that question with this analysis now. You know, we all agree that the amount I will receive is this 460, right? Isn't it? Now,
yes, sir.
Looking at the cost of that asset that I bought 385, accountant, do I make profit or loss?
You make profit.
Please come again.
Profit.
Look, I bought it 385 January, and as at this July, the cost of that, if I want to sell it, I will sell it 480, spend 20,000 naira to republish it. That means the amount I will get is 460. I have made a what? A profit. Now, what does impairment mean? Impairment now means that under your net realizable value for IS 36, which is, sorry of my writing, impairment. That's another standard. You will still take it, but not today. Impairment is telling you that, okay, the carrying amounts, you know, we all have carrying amounts. You understand carrying amounts now, Abi?
Yes.
And the recoverable amounts.
Yes, sir.
Yes, sir.
Just be following what I'm writing. I want to compare my carrying amount and my recoverable amount. This recoverable amount, I will now come here, pay the lower of fair value less cost to sell and value in use. Basically, this one has a kind of mathematical calculation that you want to know the value in use of that asset, whereby you consider all this inflation, deflation, the kind of how are we going to put it? Discounting factor to get what you are looking for here. But under your fair value less cost to sell, they will give you the fair value of that asset and the amount you are going to incur to sell off that asset. Then you will look for what you are looking for. But what impairment is telling you is that even though you are making 460 accountant as a result of that asset, your carrying amount will be higher. Just as if that what you have inside the book and what you are selling, it doesn't correlate. You spend more than when you are selling it. I get it. That is impairment. When the carrying amount is higher than the recoverable amount, that the amount you will later get on that asset, that means you suffer loss. Are you getting me? Mind you, when we get to IS12, the carrying amount means the book value, the amount which a particular account or a particular asset is maintaining. You understand this carrying amount, right?
Yeah, that's clear.
Yes, sir.
Hello, my sister.
Yes, sir.
Do you understand what
It's
carrying
clear,
amount is?
it's clear.
Okay. Now, the recoverable amount means that if your book maintains 550, are you getting me now? Your book maintains 550, and you now sell that asset, you sell it 450. Are you getting me? Do you make a loss or a gain?
A loss.
Oh, yeah, my sister. Do you make a loss? Your carrying amount is 550, and you sell that asset 450. Do you have a gain or loss?
Loss.
Loss.
My
It's a loss,
sister,
sir.
please, can you hear me? Accountant?
Yes,
We
that
can
is a
hear you,
loss.
sir.
We can hear you,
Yes,
sir.
Sorry, please, can you hear me now? Network, it come breaking.
Yes, sir. We
Can
can
hear
hear
you,
you.
we can hear you.
Yes.
Hello?
You're audible. You're audible.
We can hear you, sir.
Okay, sir.
Okay. So now, my sister who asked question, please. What I'm saying is that, do you understand the carrying amount now?
Yes, sir.
Okay. Now, I'm still coming to impairment too. The recoverable amount, we now say that you want to sell that asset. The amount that you have in your book, you say it is 550. Normally, if you want to make profit, you will sell above it, isn't it? You know, if you sell above it, you will have profit.
Yes, sir.
Abi?
Yes,
Now,
sir.
you are not selling it 450. You are not selling it 450. Is it loss or gain now?
It's a loss.
Loss.
Now, that is what we call impairment. Impairment is telling you that your carrying amount is higher than the recoverable amount. That is impairment. I try to use analysis. You know, impairment is not what I'm trying to do, but I'm only trying to explain it for us to have a clear picture of what that rule is telling you, that the impairment is the lower of recoverable amount and NRV. That means that the carrying amount will be higher than your recoverable amount. And we said your recoverable amount means that the amount you will get when you sell off that asset. And we use 450 as an example. Why the amount I use as my carrying amount is 550? What happened to that asset? It has suffered, it has suffered impairment loss. It is only accountant that recognizes all this. One thing is impairment too. If we get to IS12 under the skill, one of the topics you are going to be treating, see all this impairment, we will still talk about it as well, that what me as an accountant, we are recognizing as impairment. Tax personnel, nothing concern them with impairment, but that is not where we are going today. We still get there. But for the sake of starting the class, I just want to summarize everything that is what impairment means. So when you get to impairment, you will still understand it more better. To save my time, please.
Thank you very much, sir. So well understood.
Welcome. So
Thank you,
now,
sir.
you're welcome. So now, presentation. What really matters is all this presentation, the measurement, I get me, and the criteria. Basically, if you go and check the past question very well, they will ask about the criteria and they will ask you to calculate for your level. They can ask you to report, but your report is not something that is much like that. Go and check the past question. Unlike the professional, report is the basic thing, is their major and the most crucial area that you always emphasize on. But for you just little report and you calculate. You tell them the disclosure requirement, the measurement, and some other information. Now, another thing that you need to take note of is that presentation and disclosure. For presentation, in line with IFRS 5, this standard, not other standard. Get it right. A particular standard will tell you what they want. It's just as if that if me, I'm my sister, let me see one of my sister I want to use as an example. If me, I'm Auntie Oluwabukola, we are friends. I get me. And that friends now, we now happens to what? We want to marry ourselves. I get me. There are some things that Oluwabukola will like. There are some things that me, I will like. There are some things that Oluwabukola will dislike. What she dislike? If somebody should what? Should put it in an habit as a behavior towards her, there is going to be problem. I get me. In a nutshell, what I'm trying to say is that where one particular standard is giving you that this is what me I want, give it what it wants. Whereby in another standard, what a particular standard wants, the other standard will not want it. Please don't mix it up. Give Caesar what belongs to Caesar. Give God what belongs to God. So that's what the standard is telling you. The rules. And once you don't mix up the rules, believe me, you are good to go. So now we have, in line with IFRS 5, asset held for sales are presented separately on SOFP, that is Statement of Financial Position, and the result of discontinued operations are presented separately in the P&L account. So depending on what the examiner will be giving you, that how do you present it? You will present it in different ways, from continued operation and from discontinued operation. Now, disclosure requirements. The disclosure requirement, what does it mean? It means that what will you disclose that you want to show in your accountant? I always advise students that just know what that standard is talking about, then you will form your disclosure requirement. Because you have a lot, like for this level, apart from the standard, you'll be looking at close to like 30 standards. You still have other information you will still read about under this FR.
Something, I have a question.
Yeah, quick one, please.
Yes. Okay. So for the presentation for assets held for sale, does it mean that we're going to have a section that will be titled assets held for sale? Then we'll now include all the assets that we're disposing, or what does it mean that we'll present it separately?
Yes, you present it separately. What is meant is that in the face of the account, what you are using for running the business will be up. You will close that account, while the one that you no longer want to use, you put it down. When we solve it, you will understand it better. Now we'll solve a question now before we round up the class. We have a question to solve together. Don't worry. So disclosure now means that everything relating to that standard must be disclosed. So that means the description of the non-current asset must be disclosed. The amount associated with the asset you want to dispose must be disclosed. If it is a disposal of asset, the amount associated with it must be disclosed. Any gain or loss arising from disposal must be what? Recognized. Like that. That is how you just continue to what? Disclose. Don't stress yourself. because you have a lot of things to read about. So that is disclosure requirement. It is always easy. Just know what that standard is talking about, then you are good to go. So with that 30 minutes, let us utilize it very well. Let us solve this question, then I will attend to individual questions. So we have, I think that's the last slide. Illustration 1, Badalona PLC provide you with the statement of P&L of group for the period ended 31 December 2023. We have the first information: revenue, cost of sales, gross profit, distribution cost, administrative cost, finance cost, investment income, PBT, income tax expense, profit for the period. Additional information: due to economic crisis in Nigeria, Badalona has branch located in Kano, and a word is missing here, and will be disposed of 1/10/2023. That means that they want to sell off that asset. Mind you, I said something that where the examiner did not emphasize or tells you about a particular criteria, that what criteria is not met, you too, please don't go and do I understand this standard very well over Sabi and form your question. Just follow the trend of what the examiner is trying to ask. Then you too, you are good to go. So the operational results of the Kano branch for the period of 31 December 2023 are as follows. They gave you revenue, cost of sale, distribution cost, admin cost, finance cost. Applicable tax rate is 35%. Required, redraft the statement of profit or loss in accordance with IFRS 5. That means that I'll prepare it in accordance with IFRS 5. That means that the asset, based on the question my sister asked, that how are we going to do it? That means the asset that will no longer be recognized, I will remove it from the existing value, and I will now recreate account for that as well. Permit me as we go together in the solution. Okay. Let me use this session to save our time so that I will not be cleaning. Okay. So the name of that company is Badalona. Is it limited? Please open it from your side. Is it limited or PLC?
PLC.
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 What is the requirement?
You redraft the statement of profit or loss.
Of profit and loss in accordance
with IFRS 5.
Statement of profit or loss for the period ended. When did they close the account?
31st December.
1st December.
2023. Currency sign, Naira or dollar or pound?
Naira.
What do we have there? See, one of the simplest standard is this IFRS 5. Just copy and paste. Revenue,
Cost of
sales. What do I have?
Cost of sales. Gross profit. Profit.
Distribution
cost.
What again?
Administrative cost.
Administration cost. Administration cost.
Yes.
Finance cost.
What again?
Investment
income.
What do I have again?
Profit before tax.
Next.
Income tax expense.
Income tax expense.
What do we have again?
Profit for the period.
Profit for the period.
Profit. So now, what you now need to capture is that profit from continuing operation. Net of tax. Net of tax, that means profit after tax of discontinued. Please, can you hear me?
Yes, sir.
Operation. So after that, you have profit for the period. So before solving it, I've already posted everything that I needed. So now, without wasting our time, I'll just come here. That's why I said it is just copy and paste. It doesn't have any much information. The initial figure that you have for revenue, you know that discontinued, you no longer operate it. So you remove every information belonging to that asset from the continued operation. So what is revenue, accountant? Figure me.
475,410 naira.
What is the revenue in the additional information from discontinuing?
14,000.
Cost of sales, income, figure me.
Cost of sales.
200,154.
For this from discontinuing,
10,250.
Okay. Distribution cost.
60,400. 60,400.
60, Abby?
Yes.
Yes.
This one come
500. 500.
admin.
Admin is 54,000. 54,150.
This one come
1,000.
finance cost.
14,004.
14,000.
14,450.
450.
450. Yes.
Like this.
450.
How much?
250. 250.
250. Okay. Investment income. Do they give us any information?
7,605.
Thank you, sir. Sir, do they have any information for the other one?
No. No.
Will it be affected?
It will be affected.
Be affected.
No.
So just let me put it for your understanding, not affected. So what is the figure there?
7,605.
605, Abby?
Yes. Yes.
Because there is no information relating to investment income. Then I have my profit before tax. I'm not solving anything yet. My income tax expense, how much is it?
51,300.
$300, but I did not know the other one. So now I will leave it now. Then I will now come. What is the next thing I will just do? That's why I said one of the simplest standard is IFRS 5. Just come here. Notes to accounts. What do we call it? We call this one. So what you are solving for is, you call it net of tax from discontinued operation, or you call it profit after tax from discontinued operation. You can call it either of the two names. I'm putting it there for easy understanding. So everything you just need there, straightforward. Just copy and paste like you have it. The revenue of discontinued operation. I think you said 14,000, right? The other time, isn't it?
Yes, sir.
Yes, sir.
Copy and paste. Cost of sales,
10,250.
Less it, Abby. Oh yeah, figure me accountant. What will be my gross profit?
3,750.
3,750, Abby.
Yes, sir.
Do you all agree?
Yes, sir. Yes, sir.
Okay. So, what do I have again? Distribution cost, Abby.
Distribution cost.
How much?
500.
Distribution cost.
500, Abby.
Yes, sir.
So it's an expenses, right?
Yes, sir.
What do I have again?
Admin cost.
Admin cost. 1,000. 1,000.
How much? Accountant.
1,000.
1,000.
Finance cost,
250.
250.
So what do I have again?
2,000.
So what do I have any information coming in again?
No, sir.
Okay, that means I have profit before tax, Tabi.
Yes.
Profit before
tax.
Oh yeah, figure me. What do I have? About me 10. 2,000. So then I have my income tax, Abby.
Yes.
Yeah. What is the percentage?
35%.
Of 2,000, Abby?
Yes, sir.
Oh yeah, about me 10.
700.
700.
So then I have profit after tax from what? Discontinued
operation.
Operation. Oh yeah, figure me accountants. How much is that?
1,300.
It is straightforward. What do you need to now do is that just come here. Everything that we calculate, you know that profit from this net of tax of discontinued operation, you know, I have 1,300, Abby. 1,300.
Yes.
Isn't it?
Yes.
Abby, is that all we get?
Yes, sir.
Yes, sir.
Okay. How much is the tax that we calculate, accountant? 700, Abby?
Yes, sir.
700.
Yes.
Okay. That means that everything that I need to do, I'm done with it. So let us just do plus and minus from up. Oh yeah, figure me. About me say, what do we have here?
461,410.
Okay, money.
410, Abby?
Yes, sir.
Oh yeah, about me say
210,404.
210.
404.
Do you add it?
It's not correct though.
Add it.
180
It's 189,904.
189,904.
I'm coming. Let me clean it.
189,904.
189. 904. Abby?
Yes, sir.
Like this?
Yes.
Oh yeah, figure me. What do we have?
59,900. 71,506.
506.
Hey, network is breaking. Oh, 2 what?
271,506.
506.
506, right?
Yes, sir.
Yes.
506. Oh yeah, but me tell distribution cost.
59,900.
59,900.
59.
900.
59,900.
59 what?
900.
900.
Admin cost, income.
53,150.
54,050.
53,150. Oh yeah, finance cost.
14,200.
14,200.
No, don't mind my item. No. Let me arrange it. Let me clean that one and put it under. So we have 7,000. I think 7,000. What is this?
7,605.
Thank you. Oh yeah, what do we have?
151,861.
You know, we remove this one. No, let me put it in bracket. What do we have?
151,861.
151. Abby?
61.
861.
Yeah.
Okay. Income tax expense. Income.
51,300.
50,600.
It should be around 50,000 plus.
50,600.
Oh yeah, figure me. You know that I have, please hold on, accountant. I have this profit for the period, income tax, then profit from continuing operation is what? How much?
3. Oh, okay.
101,261.
101,261 plus
261, yeah.
plus 13
plus 1,300. 102,561.
561.
Accountant, you are done with that question.
Wow. Wow.
Once you do it that way, you are done with that question. That's all. Advice 5. Once you know what you are doing, just plus or minus, then you are good to go. And mind you, let me even make shock you again. Where one particular criteria is not met, I get me. If one criteria is not met, if the examiner make mention that maybe there is no active buyer, for example, though, there is no active buyer, please do that asset meet the criteria of discontinued operation?
No.
No, sir.
No, Abby?
Sir. Yeah, no.
Yes, sir.
If that scenario occurs, what will you do? You will not calculate anything.
Yes.
Yes.
What do I say? You will not calculate anything. You just tell the examiner it does not meet the criteria of IFRS 5. Then you now you just list the criteria, list that criteria. I get me. Once you list that criteria, then you just make conclusion. For this reason, the asset does not meet the criteria. If it is 20 marks, accountant, your 20 marks will be complete. You don't need to calculate. Just tell them the reason.
Sir,
and you tell
please, sir,
analyze the criteria.
how do we know?
That's all. Yeah. You will know from the perspective of the examiner. They will make a statement. That statement will guide you that whether it meets the criteria of IFRS 5 or not. Are you getting me? Whether it meets the criteria of IFRS 5 or not. You know that,
Sir,
for
please
example,
let's scroll down to the note of the account.
Okay. Do you want to snap it?
No, I want to check something.
Okay. So that means that you only put it in writing, then you score your full mark. And if you are calculating as well, accountant, this is just what you want to do. They can further give you maybe SOFP, that is statement of financial position. That particular asset that is no longer being used. Are you getting me? A rough sketch. Let us just do a rough sketch here. That rough sketch, maybe for example, SOFP. You know, in my question, I did not come with it. You know, under SOFP, I always have non-current assets, right? Let's say initially I have non-current assets. I have plant and machinery. I have, okay, car. Example, to save our time, I have equipment. Are you getting me? So now, they are telling us that they are disposing equipment 100,000. Are you getting me? And here, the equipment that you have is 500,000. The car you have is 200,000. And the plant and machinery is 100,000. Abi? And now, accountant, if I want to solve it, you know that we were told that they want to dispose part of the equipment of, right? So what will I do is that in my solution, I'll just come here, rewrite this, then I'll put this one into bracket minus 100,000. So what do I have now, accountant? It will now be non-current. I'm coming, please. Non-current assets from continued operation. How much is that? You know, this one will now be 400. So that means I will have 700. So it will now be 700,000. This plus 400. You know, that is 700, right?
Yes.
Yes, sir.
Do you agree with me?
Yes,
so you
sir.
now
Yes,
come here. Under it, just write non-current asset
100.
from
Yes.
discontinued operation. You can put it in brackets, equipment. How much is it? 100,000. That's all. You just write it like that. Then you are done with that question. That is one thing about IFRS 5. It is simple, but once someone did not know the criteria, it will look hard.
100,000.
Yeah, it will look hard. So, any question? So please let me see. Okay, for those who have question. Okay, Mr. Otun, yeah, go ahead.
All right. So quick one. I just wanted to. So let's assume we maybe in the process of disposing of the asset, we made gain. So how do we go about the treatment? Are we going to treat it from net profit from discontinuing operation or the other one?
Okay, thank you very much for that question. It's a fantastic one. What you are going to do is that if you have that gain, that means that you bring the gain. You know, for the question we solved here, you just bring the gain. You know, gain on disposal. I get it. You can do it in two ways. The gain on disposal, you can bring it under, you know, you have net of tax from discontinued operation. So you can bring in your gain on disposal here. I get him. You can write it under this 1,300. I get him. You can write it under this 1,300. Or better still, you can still bring it under here. You can bring it under here. I get me. You can bring it under here that maybe gain. I don't want to put anything here. Let's say gain on disposal. So if you have let's say 2,000. So all you just have to do is that you now bring it as total. You now use the word total. I get him now. Total profit. You know, you are not, you've categorized this. That's why you use the word total profit from discontinued operation. You know, I will have something like 3,300, right? Isn't it?
Yes, sir.
Are you following me? So you can do it this way, or better still, you can bring it under here. Mind you, accountants, what you need to do is that, you know, this 1-3, you can say notes to account, note 1, or working 1, note 1, so that your examiner will know where this one is coming from. Do you understand? They know you put it under, but just write in front of it, note 1 or notes to account. So they will know that that is where all your figures are coming from. Mr. Otun, I hope I've answered your question.
Yes, sir. Yes, sir. Thank you very much.
You're welcome. So please, who else? Who else? Okay, Mr. Kazim.
Hello, sir. I hope in
Yes,
the
sir.
future, sir, you will announce to us the topics we are going to treat before we get to class.
Okay. I think I guess next week we'll send you a content of the standard and each lecturers that will be taking it. So each lecturers there will be in front of it. So you will know who you are meeting. Except if there is going to be a change in time. Do you understand? So then we will know how to you will be informed ahead before the class starts. So I think
all right, thank you, sir. Thank you, sir.
You're welcome, sir. So who else again?